Welcome back. Now, South Africa's economic outlook for 2026 is showing early signs of cautious optimism. After ending 2025 in a stronger position, GDP growth is forecast at around 1.5 to 1.6% for 2026, supported by easing inflation and lower interest rates as well. Joining us now to unpack the outlook is Annabel Bishop, Chief Economist at Investec. Annabel, hi, good to chat to you once again. A great start to 2026. I mean, the bonds today rallying, a really good start.
Yes, I think, overall, we've got a lot of positive factors globally and domestically. Globally, we've seen commodity prices really lift, particularly for metals and minerals prices, and of course, industrial commodities. And let's recall that South Africa's largest exports are, in fact, metals. So, I mean, that's very, very positive. And of course, as well, we also have incoming interest rate cuts this year, both from South Africa and the US. Also, of course, having seen them start already last year for the US, that in turn tends to benefit the rand. And as you mentioned, all of these factors feed through into a modest inflation rate. So overall, there is certainly expectations of faster economic growth this year than last year. And as you said, our expectation is around the midpoint of around 1.5%, 1.6%. And of course, much will depend on what happens later in the year globally. But we saw a strong 2025 on the back of significant improvements in agricultural production. And of course, we're pulling that La Nina now over into the summer months of this year.
Annabel, I must ask though, because we're looking at what's happening with the rand, we're looking at what's happening with Venezuela. Is it not because what's happening with the United States that's driving all of this, that's keeping all of us afloat for South Africa?
Well, there's a lot going on, as you mentioned. And of course, there are still concerns around US tariffs. This year, we expected to see the Supreme Court ruling to see if they're even valid. And of course, that's the universal tariffs. There's a driving concerns around oil prices, around demand for commodities, and that's one of the reasons why oil prices are subdued. And of course, subdued fuel prices do feed through into modest inflation, allowing for further interest rate cuts in South Africa. As you noticed, the global environment is very dynamic, and of course, changes which could occur could suddenly see us move into a El Nino environment where we obviously see worse weather conditions. That negatively impacts inflation and, of course, then interest rates and growth. Also, of course, as well, risks around global oil prices. You've noted what's happening in Venezuela. Overall, we really have seen, however, if we look at global financial markets, more of a risk-taking appetite. And I think, that is really what is key for the rand that you mentioned. If we look at investor sentiment around global equities, particularly US equities, there is expected to see significant further improvements, which obviously then are seeing this risk on environment. That, of course, as well is benefiting the rand. Let's not forget the strong commodity price uplift. But for South Africa itself, I think, there's also a different story at play here. And that's, of course, Operation Vulindlela. We're in phase 2 now after a very successful phase 1, where we actually saw a significant drop in load shedding to eradication, essentially, of rolling blackouts. We came off the grey list. We've seen significant work on crime and corruption. And, of course, as well, improvements at Transnet. We actually expected to see starting to see private sector operating on the rails. And all of these are really resulting in a stabilization of the crisis that we had from those sectors, and now, of course, improvements coming through, both towards the end of last year and this year. So that's expected to drive economic growth actually to 3% over the medium term.
3%. Look, you're not toying with our emotions, are you? Because we've been battling to get over 1%, and all of a sudden this, I don't want to coin a phrase from Cyril Ramaphosa, but there is a bit of a new dawn going on here at the moment. Looking at saying that, though, what is pushing and what's driving those bonds? Because you can see that improvements, they really are improving.
I think that's absolutely key, and I'm just drawing up my bond market note here as well. The last time we saw bonds at such significantly low yields for South Africa, and here we're talking about the benchmark government bond, has really been about 7 years ago. And lots been happening to improve the global investor environment, as we mentioned. But obviously, if we have a look at if we really break it down and see what's happened, South Africa's benchmark government bond, the Govie, strengthened by almost 190 basis points over the past year. That's
Sure.
very substantial, almost 2% compared to, less than 1% over 2024. And 23 and 22 actually saw it weakening. So the biggest driver has really been the reduction in political risk. That was the biggest driver of the increase in the yields. And then, of course, after the government of national unity, it didn't completely fall away. It
Right.
took, several months, and of course, moving into this year now, really to see that the partners are working well together. But more importantly, as you mentioned, it's translating through into stronger economic growth, both via Operation Blue and Leila and other areas.
Yeah. It's interesting when you say that because there are many concerns that, at any point things could kind of derail a little bit, not to be pessimistic. But in saying that, the government of national unity has stood the test of time. They've done very well despite those moments where we thought things were going to totally unbundle.
And I think, that's the key point that also globally there is political fragility. It's not just in South Africa around concerns that things could unbundle, as you said. And it happens all around the world. So I think, countries which do still have some of this political concern, as generally tends to be around, the world, as we said, but are managing to still track forwards to get better economic growth, but to improve their fundamentals, to improve different areas of the economy, sticking to fiscal consolidation, another area that has been driving bond yields lower. And of course, we've obviously seen the new inflation target. We've seen low inflation rates themselves. We've seen interest rate cuts. Of course, what's happening in the US in terms of their financial markets. All of these feed through into these moderation in our bond market yields.
Mm.
So, overall, we do see South Africa being attractive for foreign investors. And of course, we obviously expect to see this improved growth trajectory. So we should continue to see an uplift. But nevertheless, as we mentioned earlier, there are always risks of shocks to the system. And of course, we have been in a very sweet spot with high metals prices, high industrial commodities prices benefiting our exports, even, to the benefit of government finances in certain areas in terms of revenue. But of course, low fuel prices, food prices, even declines in some areas, which have moderated the inflation rate so substantially. So I think we do need to bear in mind that many factors are in South Africa's favor at the moment from these economic metrics we're discussing.
Yeah. Are we being seen as a safe haven? Because we see what's happening with geopolitics at the moment. There are tensions in Europe. The tensions, of course, with the United States. In fact, the United States is looking at Greenland at the moment. So they want to go and invade there and take that over. Are we seen as the global south as a bit of a safe haven, which is quite refreshing?
So we would caution against calling an emerging market economy a safe haven typically, because South Africa still has elevated CDS. If you look at our credit default swaps, they're still very elevated compared to other emerging market countries. And in fact, we really have obviously seen an improvement in these over the past several years, but they are still above 100 basis points. So now I wouldn't say that we would say we are a safe haven as such. Those still belong to your key global economies such as the US and of course countries like Europe, etc. But what we obviously have seen is that South Africa is certainly seeing a better outlook on many different fronts, as we discussed.
Mm.
So obviously from a global south perspective, and it's so important that you brought that up, we've already seen a lot more in terms of trade flows in the global south, which has actually allowed the global economy to be very resilient in the face of US tariffs. So, for example, while China has dropped trade very substantially with the US, trade has improved very significantly by over 10% in the global south. And of course, South Africa is benefiting from this as well. Let's not forget South Africa does still have a number of key risks and key areas which there are concerns around. For an emerging market economy, our debt to GDP ratio needs to be below 60% for our borrowings to
Sure,
be
sure.
sustainable. And of course, that at close to 80% does not show sustainability. So there are still risk factors. And of course, in the South African economy as well, there's many different government policies which are, up this year, which have obviously been enacted. And of course, now there's concern around them, worries how it'll affect the economy, and that in turn, will result in court cases. So many things happening. But I think, South Africa's not unique in having
Yeah.
a set of problems which it's working through and, of course, doing well overall. Let's, really obviously bear in mind that one of the reasons why we do see such high turnover in the rand, such substantial foreign interest, is that we do obviously differentiate ourselves in terms of our financial markets.
Yeah.
They're very deep, they're very liquid, they're very well capitalized, they're extremely well run. South Africa's typically has a very low risk of a banking crisis, for example. So South Africa's financial markets, are certainly seen as more of a safe haven than, the economy itself. But overall, again, doesn't mean we're not going to be hit with a broad brush stroke if investor sentiment turns negative globally and there's a general sell-off of EMs. I mean, you wouldn't
Yeah.
expect South Africa to be differentiated then.
Right, looking at those ratings agencies, because if they're looking at what we're looking at the moment, I'm sure there's got to be some sort of uptick here. Things are looking relatively stable. It's a good start to 2026. Will we see those ratings agencies perhaps change their minds about us?
Well, we have already with S&P, and I mean, that's so important. It really does reflect that there has been some stability there. I think, however, as well, though, we need to bear in mind that Standard & Poor's was one of the worst in terms of the ratings that we had. And here we're really looking at the three key credit rating agencies. So that's Fitch, S&P, and Moody's. And those are the ones that the markets, global financial markets, really take the greatest credence over. So if we have a look at the domestic fiscal environment and we have a look at where government finances are at the moment, it's actually quite key that we are still, however, not seeing a very good outcome yet in our government finance figures for the 25-26 year. If we look at the first 8 months of the year, which are available, expenditures still running quite strongly, and of course revenue is similar to last year. So we've already used up about 80% in terms of our budgeted deficit, and we're not at 80% of the fiscal year yet. So from that perspective, there are still a few concerns. So while we would not expect to see any significant jumps in credit ratings, we go up a couple of notches or more, one notch moves are quite possible. And here we'd certainly look at Fitch for that, because now they're the outlier. Standard & Poor's and Moody's both on the same rating notch, and of course Fitch one notch lower. So I think that's maybe perhaps the way that we would look at it, is that it's a slow and steady improvement as opposed to any fireworks. And slow and steady is what South Africa needs to rebuild global investor confidence after the significant years of state capture and the corruption, to rebuild domestic investor confidence in the economy and in terms of economic growth, particularly in fixed investment. And all of these factors, if you have the boring, slow, steady approach, particularly to fiscal consolidation, really eventually put you in the pound seats.
Yeah. Annabel, in a nutshell, how do you see our economy going over the next 6 months? I won't say a year because that's too far to predict, but the next 6 months, in a nutshell, how are you seeing it?
Well, last year, very, very interestingly, and, with the first 3 quarters of the year having, available data, it was very substantially driven by the agricultural sector. And of course, we saw above normal rainfall, and that in turn resulted in very ample harvests. So, that La Nina effect, as I said, is going to come through in the next few months as well. Obviously, we've got a couple more left of summer now in the earlier part of the year, and then of course going into autumn. So that's expected to be positive for growth. Unfortunately, and here we talk about agriculture, unfortunately later in the year there's a risk of an El Nino. So the La Nina is above rainfall, the El Nino is below rainfall. There's a risk of that, which could obviously have a negative impact on food prices and on agriculture. So I think it's, as we said, there's a lot of factors which are in our favor. We expect to continue to see this persist over these 6 months you mentioned, but obviously with some of the risks still pertaining on a global environment. I mean, the World Bank, for example, cautions that they still worry about global economic growth and therefore the impact on commodity prices. But we're optimistic. We think we're still going to get good growth rates coming out. And as you said, this is the last 6 months of this year are a bit far away, but much depends on the weather for then. But I think, it's a real feather in our cap that we've had such strong growth coming through from the agricultural sector. One obviously led by our opposition's leader of the opposition in South Africa as the minister. So, we've actually seen, a lot of improvement around the political risk, around the political functioning in South Africa, between parties. And of course, that's, feeding through, of course, also into our economy. And we think we're going to continue to see traction in this front. What we don't think is going to happen is that the municipal elections, which could be, towards the end of this year, early next year, will result in elevation in risk aversion. We don't see that happening again, like the national.
That is something else we'll need to talk about, the municipal elections, but not just yet. Annabel, thank you so much for coming on to the Close on Business Day TV. I really do appreciate you taking the time. Thank you. Thank you. That was Annabel Bishop, a chief economist at Investec.